Is this the fall of EV stocks? Hello guys, it's your fellow investor here and welcome to another video. In this video I'm going to be talking about current drops on the stock market in the EV sector, the overall sell-off and why this could be happening right now and what is the reason. And if you and I should be worried about our stocks. So thank you for joining in this channel. We talk about EV stocks, renewable stocks and all that promising stocks which could really be beneficial in the future. And we try to target them and invest in them so we can make better investments in the future. With that being said, let's get into the video. First, let's start. Why are Chinese EV stocks probably falling? Candy Tech falls as short seller alleges falsified sales. Short seller Hindenburg Research says Candy Technologies falsified its revenue using fake sales. Candy Technologies Group, ticker symbol KEY and DI, lost a quarter of its market value on Monday after the short seller Hindenburg Research alleged that the China-based electric car parts company was falsifying revenue using fake sales to undisclosed affiliates. Hindenburg Research said that while many investors have realized that electric vehicles are the future of the auto industry, a psychotic flood of speculative capital has lifted all companies in the sector regardless of quality. The research firm said it had identified Candy's named top customers and found that almost 64% of Candy's sales over the past 12 months have been to undisclosed related parties. The company's largest customer, representing about 55% of the past 12 months' sales, shares a phone number with a Candy subsidiary and shared an executive with Candy. The company has consistently booked revenue it cannot collect, a classic hallmark of fake revenue, Hindenburg Research said in its report. Candy's top financial ranks have been a revolving door, another key sign of accounting irregularities. The company has had 3 auditors in the past 5 years and 4 chief financial officers in the past 4 years. Candy's latest issues are part of a long-running pattern, the firm said, rather than an isolated incident. The architects of Candy's original go-public transaction were charged with fraud by the Securities and Exchange Commission in 2014 for, among other things, engaging in a scheme with Candy's chairman and chief executive to artificially inflate its stock price, Hindenburg said. Hindenburg Research said its investigation included on-the-ground inspection at Candy's factories and customer locations in China, interviews with over a dozen former employees and business partners, and review of numerous litigation documents and international public records. The company will likely issue some sort of press release declaring everything we say false and misleading as they always do, while ignoring all or the vast majority of the question we've raised, the report said. They might throw in a legal threat and a token share buyback insider purchase for good measure. The report said that a company like Candy only needs to fool some of the people all of the time. The company has raised $160 million from US capital markets in November 2020 alone, and we have no doubt it will attempt to perpetually sell stock, the report said. Overall, Hindenburg Research accused Candy from inflating their delivery numbers and fake revenues. Hindenburg Research, what makes me a little bit worried that Hindenburg Research is not some casual short selling research group or company. They are a little bit more trusted than the others. So yeah, every time when you see a short seller report, there will be always some twisted words and some things will not be as they claim to be, but with Hindenburg Research there is probably something, there's a little bit of truth inside. So I would be cautious with Candy, however, unfortunately it put all of the other EV stocks into a bad spot. But let's continue with Candy response to inaccurate short report. So a day after Hindenburg Research accused them with the short sell article, Candy responded to report with respect to Candy and its operations. Hindenburg Research, as it disclosed, has taken a short position in shares of Candy. Candy believes that the report contains numerous errors, misstatements of historical facts, inaccurate conclusions, and superfluous opinions. Candy takes seriously any accusations of impropriety and intends to address the key issues raised by the report. The company plans to study the report in depth, isolate the key inaccuracies, and prepare detailed explanations that will be presented in the near future. So we can only hope that it will not end up like NKLA last time when they had similar kind of response, and however it was Trevor Milton response to be exact, to be specific, and it didn't go on too well. So let's hope that Candy will put the things in the right way, because otherwise there's gonna be a deep wound in the EV market. But that's not all. Another reason why EV stocks took a hit. The reason why most of the EV stocks crashed or just dropped down sharply is that General Motors scaled down deal with NKLA, and moreover Beijing launched EV investigation. Hindenburg Research accused Candy, as I mentioned earlier, and there was some Citroen's allegation against Blink. Everything is just like going together hand in hand negatively in the EV sector. So this is maybe even worse than the Rona for EV sector, but I would say it's only temporary, and when there will be things, when things will be more clearer, the bad stocks will go in a trash or they will get delisted, and then there will be the rest of the stocks which will stay and will be prosperous. And last but not least, China stocks delisting threat grows for Alibaba, JD.com, NIO amid House vote, Candy fraud allegations. So there's last nail into the coffin for EV stock market, NIO stock, Xpeng to be specific. The bill, which already cleared the Senate in May, could kick Chinese companies off US exchanges within 3 years. That would happen unless their auditors come under supervision of the Public Company Accounting Oversight Board. But yet Beijing has made it illegal for Chinese auditors to submit to such scrutiny from an overseas regulator, seeing it as an impingement of national sovereignty. With House passage of the HFCA bill looking certain, China's hardline would seem to doom the US listings of China stocks with a combined value of more than $2 trillion. Congress may not have the last word, says Derek Scissors, resident scholar at the American Enterprise Institute. Treasury controls implementing regulations for whatever Congress passes. So even though they're claiming that the NIO or Alibaba might get delisted, only companies which directly support or exchange information to Chinese army or Chinese government will get delisted. But I don't know if Alibaba or NIO really cooperates with the Chinese army, so this might need a little bit more clarification. However, even if they would somehow get delisted, mutual funds and big investment groups will be able to buy the Chinese stocks. I hope I brought you some value. If I did, please subscribe to the channel so you don't miss out any new videos. I upload daily videos about stock related news, so definitely subscribe to the channel and click on the bell so you know when I upload a video as soon as possible. And if you feel like it, you can even click on the like button. It helps me out tremendously. What are your thoughts about this current situation? Did you buy more shares during these dips? I'm really curious to hear your opinion. And with that being said, thank you so much for watching, and I'll see you in another video.